Welcome to our discussion on the Observatoire de l'assurabilité des risques naturels. We're diving into a comprehensive report that lays out a framework for monitoring insurability in the face of natural hazards like floods, droughts related to clay expansion, and cyclones. It's a
Right,
hefty document.
absolutely. It's not every day you see such an in depth analysis blending territorial data, statistical methodologies, and socio-economic factors to assess the sustainability of our insurance model. What stood out to you first?
Well, the report lays its foundation on the idea that our unique system, built on national solidarity and public private partnerships, has been the backbone for ensuring protection for individuals even in high risk zones. It stresses that our indemnification regime is centered around universal access, but it candidly examines emerging signals of tension in specific territories. It's fascinating how they balance
Yeah,
celebration of the current system with a note of caution, isn't it?
exactly. They point out that while 97.7% of metropolitan communes are in what they call green dark status, meaning no tension in insurer presence, there's still roughly 2.6% of communes showing signs of stress, with a few even in moderate tension. These are mainly in the east, the Massif Central, Corsica, and in the overseas regions, correct?
Right. And what's really neat is how they use spatial analysis at two distinct scales, the communal level and the infracommunal level. On one hand, the overall number of insurers present in a commune is evaluated. On the other, they look specifically at zones exposed to natural hazards versus the rest of the commune.
Hmm.
This dual approach helps pinpoint localized imbalances that might otherwise be hidden.
Yeah, and speaking of indicators, the report emphasizes two major ones: the raw number of insurers present and the Herfindahl-Hirschman Index, or IHH, which captures market concentration. Did you notice how they even set statistical thresholds based on the size of the insured housing stock?
Absolutely. It's like, comparing small towns to large ones without skewing the numbers. They define target values for each indicator based on communes with comparable numbers of insured homes. For example, for small communes with about 100 houses, thresholds were set around 14 insurers, or even 12 if you go beyond three standard deviations. That makes the analysis both fair and
Right,
robust.
agreed, but I wonder, don't you think there might be some critique about how much weight is placed on these numerical thresholds? I mean, can metrics like IHH capture the nuances of local market conditions fully?
That's a good point. While the IHH is a solid indicator of market concentration, it does have its limits. The report itself emphasizes that these indicators must be interpreted with caution and in the context of other factors like historical underimplantations or socioeconomic dynamics. For instance, a high IHH in a small commune may simply reflect the low volume of contracts rather than an actual market
Hmm?
failure. It's a balanced view overall.
And then there's the matter of the data sources. They combine private insurer data, covering over 90% of the market, with public data like cartographies from Serima and BitTopo building data. It's a really holistic method, don't you think?
Definitely, it's impressive how they blend diverse data sets. They use insurer portfolios, sinistrality records, and even administrative data regarding catastrophe orders dating back decades. This data cross-validation adds credibility. Plus, the method of distinguishing between zones with and without risk is critical in isolating potential issues that are directly due to natural hazards.
Right.
It's like layering a map of reality over a statistical model.
I like that analogy. It's like um, they create a statistical x ray that pinpoints where things might go off balance. And when they observe differences, for instance, fewer insurers or a higher market concentration specifically in zones exposed to flooding, they flag these as early warning signals. This could be really important if, say, a major extreme event occurs.
Exactly. The report even presents detailed maps. One of them shows the spatial distribution of insurer presence and its anomalies. There's a clear pattern. While most communes are well covered, some regions, particularly in historically less attractive commercial zones or areas with past high sinistrality, begin to show signs of undercoverage.
Hmm?
It's a critical insight for policymakers.
Speaking of policymakers, the Observatoire was set up at the request of ministers involved in ecological transition and finance. It ties directly into the PNACC3 by offering a reliable, objective tool for tracking insurer dynamics. The long-term aim is to maintain and even enhance universal access to insurance despite increasing natural hazards. How do you think this fits in with the broader climate adaptation strategy?
Oh, it's a perfect example of prevention in action. The idea is, by monitoring insurer presence and market concentration, authorities can intervene early, maybe through reinforcing prevention measures or adjusting solidarity mechanisms like the Cat Nat premium to avoid runaway market failures. It's quite forward-looking, even if it appears reactive in spots.
Right, and it's interesting that the report also highlights a connection between investments in prevention and tangible cost savings. They mention that, on average, every euro invested in prevention can avoid around 3 euros of losses due to natural disasters, and in some measures, that ratio can be even higher. That's a persuasive argument in favor of proactive risk management.
Yeah, it's like investing in a very robust safety net early on. And that prevention angle is particularly important since the report shows that even if the insurance coverage is maintained, there's a potential for a narrowing choice of insurers in some areas. This could lead to market concentration that might adversely affect premium levels and risk sharing down the line. So prevention isn't just a defensive measure, it's strategic.
Exactly. Now, something I find really striking is the nuanced treatment of overseas territories, DROM. The report states that all communes in these areas are classified in at least a light tension zone. This is due to a combination of fewer insurers historically and very high exposure to events like cyclones. But even so, they're still covered, albeit with a more limited choice. What's your take on that?
Yes, the DROM situation is both unique and quite concerning. With around just 20 insurers operating compared to 41 in metropolitan France, it leaves these regions particularly vulnerable to any further market contraction. And the high sinistrality, like those cyclones with staggering cost projections, adds to the complexity. It's an early indicator that these markets need careful monitoring and possibly tailored regulatory or support measures. It's a
Right.
classic case of vulnerability magnified by geographical isolation.
Indeed. And the report doesn't just end at stating these facts. It also calls for a maintained dialogue between state bodies, insurers, and local governmental actors. They seem to advocate for an evolution in the system where early warning signals are taken seriously, ensuring that if further disinvestments occur, corrective measures can be activated swiftly. Would you agree that this proactive stance is the key takeaway?
Absolutely. It's like having an early warning radar for market imbalances. The committee's work, buttressed by a rigorous methodology and annual follow-ups, is exactly what we need in today's ever-changing climate landscape. And the fact that these signals are described as weak or early, yet still warrant monitoring, shows a remarkable level of prudence. It's better to catch a small drift in the wind than to wait for a storm.
I love that analogy. And speaking of the methodology, the report's use of dual scales, communal versus infracommunal, really underpins the detail in the analysis. It compares the insurer presence per commune with that in a specific zone at risk versus the remainder of the commune. In many cases, these differences are negligible, but in other cases, they highlight potential pockets of tension. That granularity is essential for targeted public action.
Yes, the precision is key. For instance, they note that even when the overall number of insurers is comparable in a commune, in certain zones exposed to floods, there might be a significant drop in insurer presence. This differential, sometimes a drop of a dozen insurers in the risk zone compared to the rest, cannot be overlooked. It's a statistical signal that might eventually translate into practical, on-the-ground challenges for residents. And that kind of insight can guide more local preventive measures.
True. And it's not just about numbers. The socioeconomic analysis adds another layer. While communes in tension tend to be less densely populated and, interestingly, sometimes economically attractive with higher median incomes, they also show a slower demographic growth and an aging population. This dichotomy might, in the long run, further dissuade insurers from deepening their presence if the market becomes less dynamic.
Exactly. It's a sort of feedback loop. Fewer new policyholders and an older demographic might make these areas less commercially appealing. That, in turn, could lead insurers to further concentrate or even withdraw over time, which then could force residents to face higher premiums or fewer options. It's a multi-layered challenge. And while the report reassures us that full withdrawal hasn't happened anywhere yet, it emphasizes the need for continued vigilance.
Now, one point to discuss. I've heard some critics mention that the analysis might underplay the role of prevention measures at the individual level. The report does acknowledge a difficulty in integrating data on individual building prevention because of data availability. What's your view on that omission?
That's a fair concern. The report does mention that prevention actions, apart from collective schemes like PPRs, are not fully captured due to limitations in available data. This means that while the analysis of insurer presence and market concentration is rigorous, it doesn't fully account for how proactive improvements in resilience can affect future risk profiles.
Right.
So, while the Observatoire is a strong tool for monitoring insurer dynamics, its predictive power regarding the full impact on sinistrality might be somewhat limited until more prevention data can be integrated.
Exactly, and that's where follow-up editions can make a real difference. As more data on individual prevention become available, future reports can offer a more complete picture not only of current tensions, but also of how improvements in building resilience could mitigate risk and affect insurer participation.
Definitely, this iterative approach of annual updates is vital. The current report, with its deep dive into 2022 data, lays the groundwork by providing a snapshot while anticipating further changes. It even reminds us, with caution, that while current tensions are weak or moderate in only a tiny fraction of communes, events like a severe cyclone or flood could rapidly shift the balance. It's essentially a call for constant vigilance.
And it's interesting how the report intertwines technical rigor with policy relevance. The careful distinction it draws between a mere reduction in insurer choice, which doesn't mean people can't get insured, and a scenario where a withdrawal could threaten the system's sustainability is critical. It's a nuanced message that policymakers need to hear.
Exactly. It's not about alarmism, but rather about an informed monitoring system. The fact that only about 1% of communes show moderate tension, and no commune is in a red state of severe tension, is a positive sign. However, the potential fragility in areas like the overseas territories or certain rural communes should not be underestimated.
Right.
This dual lens helps target future regulatory and supportive measures.
Right. And it ties back to the concept of mutualization as a protective pillar. The whole framework rests on shared risk and the unique public-private arrangement. The report even quantifies key ratios, like the fact that Cat Nat premiums constitute a very small fraction of median household income, underscoring that cost isn't the prohibiting factor yet. But if market concentration worsens, choice could narrow and premiums might rise, undermining that foundational principle of solidarity.
And that is why the Observatoire's role is so critical. By continuously monitoring both the quantitative and qualitative aspects of insurer presence, it can act as an early warning system. It's like having an insurance market pulse check. If you notice the number of active insurers dropping, or the IHH climbing significantly, that might prompt interventions well before major disruptions occur. It's
Exactly.
a proactive management tool.
And the interdisciplinary approach in the report is commendable, bringing together technical experts, regulatory bodies like the DG PR and DG Trésor, and representatives from the insurance industry itself. This collaborative model is essential for tackling issues that cross both economic and environmental boundaries. Don't you think it's a model for how complex climate-related challenges should be addressed?
Absolutely. It reminds me of a symphony, where each instrument needs to play in tune for a harmonious outcome. Here, the instruments are the insurers, the state, local authorities, and even the technical agencies. Together, they create a balanced picture of risk management. Even if individual notes might sometimes seem off, the ensemble works toward a common goal.
Right.
That's a really apt analogy.
Indeed, and as the climate changes and natural risks intensify, such robust frameworks become indispensable. It encourages innovation in risk assessment and even in how insurers might develop new products or adjust premium structures without compromising the mutualization principles. Plus, it sets the stage for dialogue on potential reforms if early signals indicate a turning point.
Right, and it's reassuring to see that, at least for now, the majority of territory remains well covered. But it also clearly signals that even subtle shifts, like a modest decline in the number of insurers in high-risk zones, can be a precursor to larger challenges. This report is essentially a strategic roadmap for maintaining an equitable insurance landscape despite growing climatic pressures. It's both
Hmm?
technical and deeply policy relevant.
So, in summary, while the current state of insurability looks robust, the integrated statistical analysis and detailed mapping provide a clear call to action for continuous monitoring, especially in those vulnerable pockets. It's a blend of assurance and caution that you don't often see. This discussion gives us plenty to think about as climate risks evolve and as markets and policies need to adapt. Would you agree?
Absolutely. It's a dynamic picture, a real-time pulse check for the insurance sector in a changing climate. The Observatoire sets a benchmark for transparency, objectivity, and vigilance, which will be key in safeguarding our future. And it certainly
Right.
makes the conversation about insurance much more engaging and layered.
Indeed. Thanks for such an insightful discussion on this dense yet crucial report. I'm looking forward to the next edition and seeing how these early warning signals evolve. Until then, it's clear that proactive management and a deep dive into the data can make all the difference in preserving a fair and robust insurance system.